Welcome to Comply on the Fly with M3 and Karen B, your trusted resource for quick, reliable insights into employee benefits compliance. Each episode delivers clear answers to common compliance questions. Whether you're tuning in for the first time or you're a seasoned listener, we're here every other week to make navigating compliance a little easier. Please note this podcast and the contents herein do not constitute legal advice. In all cases, employers should consult with their own legal counsel. Let's dive in.
Hello, everyone. I'm Karen B. And the Comply on the Fly topic for today is 5500s. Recently, we have encountered a number of clients and prospects that have not filed 5500s as required by ERISA, which is the Employee Retirement Income Security Act. ERISA requires information to be reported for both retirement and health and welfare benefit plans. For our purpose on this podcast, we are only referring to the requirement applicable to health and welfare benefit plans, not retirement plans. Welfare benefit plans include health, dental, vision, life, accidental death and dismemberment, short-term disability, long-term disability, and other employer-sponsored plans. Form 5500 reporting is required for any line of coverage that has over 100 participants, and that means employees, not covered lives, at the start of the employer's ERISA plan year. Form 5500s are due 7 months from the end of the employer's ERISA plan year. For instance, ERISA plan years that coincide with the calendar year of January 1 through December 31 are due by July 31st of every year, which is 7 months after December 31st. Form 5500 itself requires specific information from employers. First, it requires that the employer provide participant counts for the ERISA plan, and those participant counts must come from the plan sponsor or the employer. Some employers have ERISA plans for each line of coverage they provide, and others combine all lines of coverage into one ERISA plan, which is known as an ERISA wrap or mega wrap plan. Insurance carriers will then supply information that is required to be filed with the 5500 in the form of Schedule A's for any fully insured product and Schedule C's for self-funded. These schedules provide total premiums paid to the carriers and commissions paid to any agent or broker. When all the required information is gathered, it is transferred to the IRS Form 5500 and Schedules A or C and filed with the Department of Labor or DOL. A summary annual report or SAR is generated from filing and must be distributed by the plan sponsor to the plan participants no later than 2.5 months after the Form 5500 is due. Most employers with self-funded plans are not required to file Schedule C's based on the funding mechanism of the plans. Here are some important things to keep in mind as a plan sponsor of ERISA plans. Logistics. The logistics of the 5500 filings are driven by how you have organized your ERISA plans. If you currently do not have ERISA summary plan descriptions or SPDs for your welfare benefit plans, please contact your M3 team for options. The summary plan description will identify your ERISA plan year as well as your ERISA plan number, which is a 3-digit number starting with a 5. This information is crucial for filing your 5500s properly. Organization. You are allowed to combine or not your welfare benefit plans for purposes of your ERISA plan organization. Some plan sponsors will combine all their welfare benefit plans into one ERISA plan, and others will combine a few plans or just have one plan or line of coverage in one ERISA plan, ending up with several ERISA plans. As the plan sponsor, you have the discretion to determine how your plans are organized. And threshold. Once you have your ERISA plans, it is important to remember that the participant count of 100, and that's employees, on any plan is the trigger for your obligation to file 5500s. For instance, let's consider employer A. And employer A has one ERISA plan, Plan 501, that includes health, dental, vision, life, AD&D, STD, and LTD. So a wrap or mega wrap plan. If just one line of coverage has over 100 participants on January 1 of 2024, then the employer must file a 5500 for this plan and all lines of coverage by July 31, 2025. However, if you have employer B, you have 3 ERISA plans for this employer, one for health and dental, Plan 501, one for Vision, Plan 502, and one for Life, STD, and LTD, 503, and only the Vision goes over 100 on January 1, then the employer must only file for Plan 502, which is the one that we designated for Vision. Also, be proactive. Plan sponsors that have any plans or lines of coverage with a participant count that's nearing 100 should monitor these counts every year to determine if a 5,500 filing obligation will be triggered. And one more important thing, this is an ERISA requirement. So if you are a public sector employer and you are not subject to ERISA, you are not subject to the 5,500 filing requirement. So it is really important that you understand your obligations as dictated by ERISA, that you understand that you have proper documentation, and then that documentation will dictate how 5,500s are filed. It is also incredibly important to keep your eye on any line of coverage that you sponsor and make sure that when you're nearing 100 plan participants, that you contact your M3 team to get enrolled in the M3 5,500 filing service. And that is your Comply on the Fly topic for today. Thanks for tuning in.
For more employee benefits compliance insights from Karen B. and her team, please visit m3ins.com.